Welcome to the Capital News. I'm your host, Alex Corritis. Today is Monday, November 30th, 2020. Thank you so much for joining me. I hope you all enjoyed your weekend. Title of today's podcast, What's Silver and Gold Telling Us? Been some pretty big price movements, especially to the downside with respect to gold and silver, so I think it's worth a little bit of a discussion today. What might be taking place within the precious metals market? I am a long-term bull when it comes to this market. I think the stars are in alignment across the board for this market. This is not going to happen overnight. This is a process. Bull markets tend to climb a wall of worry. We are nowhere near any type of bubble or blow off top, in my opinion, with respect to the precious metals market, especially with gold and silver. And there's a lot of people who like platinum and others. But my main focus, at least today, is on silver and gold. And again, too many boxes are checked and or are going to be checked that add fuel to this long-term bull market. Low interest rates, negative interest rates, negative real interest rates, geopolitical uncertainty and instability. The whole COVID-19 mess and massacre that governments the world over, given their restrictions and their lockdowns, that damage, as bad as it has been this year, may very well be even worse next year. Yeah, sure, it's Vaccine Monday, and of course we got more vaccine junk news today. Moderna filing for an emergency use application, expecting to get it, and I'm sure they'll get it, as will Pfizer and the others as they start to trickle out at 95, 96, 97% effective, whatever number they want to come up with. I think Moderna, even in severe cases, they say, with respect to COVID-19, it's 100% effective. How big's the sample size? Why don't you look into that and get back to me? Okay, I'm not taking it. You want to put it in your body, be my guest. Free country, do what you want. I'm not taking it. I don't trust these people. I don't trust this process. Not doing it. If you're somebody, obviously, who is high risk, that might be a different story. But, to me, it's Operation Warp Speed. I don't like the name. I don't trust this process, nothing. And I really don't like saying that because, it's a lot of brilliant people within these pharmaceutical companies, a lot of doctors and scientists and researchers, what have you, doing a lot of, hard work. And I'm sure it's good work to an extent, too. But, this is just too quick for me to trust it. If there are therapeutics, I would probably be a little bit more receptive to therapeutics. A vaccine is a little bit different as far as I'm concerned. So I'm skeptical. But be my guest and take it if you so desire. What are some other boxes that are checked or going to be checked? Well, there's no end in sight with respect to what central banks the world over are doing with their respective monetary policy. They're not tightening anytime soon. Remember, Chairman Jay Powell here at the Federal Reserve says, I'm not even thinking about raising interest rates. Not going to happen. And now, as we've been discussing, well, I guess it's somewhat more official today. The dingbat, Janet Yellen, the former chair of the Federal Reserve, oh yeah, she is getting the nod to be the next Treasury Secretary. And most likely, she'll get it. Why? Because she's already been confirmed. She's been confirmed to be the vice chair of the Federal Reserve. She's been confirmed to become the chair of the Federal Reserve. Why wouldn't she get this? This is the blind leading the blind. This is like wearing a t-shirt. Both of these people, Jay Powell and Janet Yellen, both wearing t-shirts with arrows pointing to each other that says, I'm with stupid. That's what this is. This is simply a continuation. They're not going to stop. Joe Biden and Kamala Harris, they have a very, very big spending plan ahead of us. As would Donald Trump. There is no end in sight. Again, this cuts both ways. Stop voting for them. Stop supporting them. How many more pieces of evidence do you need? Evidently, perhaps, as we discussed last week, I believe it was on Thursday, we looked at the U.S. debt clock, usdebtclock.org, little function, time travel function, go to 2024, which is only 4 years away this time, because it's at this date, this time. Just maintaining the current rate, the current trajectory, will be at some $48.5 trillion in national debt. $5-6 trillion annual budget deficits. That becomes par for the course if we just maintain where we are. And you know it's going to get worse because Jay Powell says now is not the time to worry about the debt. Janet Yellen says now is not the time to worry about the debt. Current Treasury Secretary Steven Mnuchin, now is not the time to worry about the debt. So when's it going to be time to worry about the debt? Evidently it's not. Evidently that's a problem for you, your children, your grandchildren, your great-grandchildren yet to be, and other future generations are just going to have to flip the bill. This is a fool's paradise. And there's a lot more fools running around than there is any semblance of paradise. Ignorance must be bliss. Because people don't even know to ask these questions, to even bring this up. You have to understand. All of this stuff needs financed. Everything they're doing to us. Everything they've done, everything they're doing, everything they want to do, it all needs finance. You understand why you have to abolish the Federal Reserve, why you have to abolish the federal income tax. You understand? You have to starve the beast. Money is the source of their power, and they can print it at will, and that's exactly what they have been doing, throwing trillions and trillions of dollars into the system globally, and there is no end in sight. And one central bank after the next is calling on their respective federal governments to do more. They will finance it. You understand this? Nobody wants to take their medicine. It's the headline economy. It's the zombie economy. Here in the United States, nearly 20% of all U.S. companies can be classified as zombie companies. Highly destructive and devastating. You have to allow poorly managed businesses to go out of business or to go through bankruptcy and restructure. This would be the market solution, allowing stronger, better run companies to pick up that market share, making it better for those respective companies and better for the overall economy. This is not a smack in the face to entrepreneurs. This is a learning lesson to those entrepreneurs. You can restructure. Lesson learned. Come back. Now you know what to do. Or go work for a little bit at one of those better run corporations. Small, mid, large size, doesn't matter. Better understand some best practices. Make some better connections. Then go out and do it again. And now you know what to do and know what not to do. That's how it's supposed to work. When politicians and central bankers get their slimy, greasy, dirtbag fingers involved in everything, this is what happens. Everything becomes distortionary. There's malinvestment that runs rampant. And it's anybody's guess as to how bad it's going to be when everything corrects. Because despite how powerful they are, federal governments and central banks, they are not bigger than the market. And when the market has its day with us, and it eventually will, and I hope that it does, because that at least means there's some hope out there that markets actually still do exist. Because if there is no type of massive correction, then all bets are off. We are completely controlled. This is a command control economy in society across the board, across the globe. Period, end. We need that type of creative destruction. That's what needs to take place. But because they keep building one bubble after the next, equity prices, the bond market, the currency market, interest rates, it's just going to be devastating across the board. And they understand this. Make no mistake about it. They understand this. And that's why they're trying as hard as hell to put up as much smoke and mirrors as they possibly can to keep us distracted from what's coming. These are the rats abandoning the ship. You see the wealth and income inequality that's going on here? Have we been following the money since the passage of the Nobody Cares Act? And the implementation of former emergency facilities at the Federal Reserve and new ones? Which we talked about that last week too, because there was a little bit of a skirmish between Mnuchin and Powell about whether or not those emergency facilities are going to expire, if any of that money that has not yet been utilized by the Federal Reserve is going to go back into the Treasury. And then there's hundreds of billions of dollars sitting at Treasury that haven't been utilized either. And there was reporting that came out over the weekend questioning where all that money is going, what it's doing. And the Federal Reserve and the Treasury Department are playing back and forth, turning the reporters into the monkey in the middle. Oh, well, we don't know. You have to go talk to them. Oh, well, we don't know. You have to go talk to them. This is our money, remind you. Hundreds of billions of dollars. People are in food bank lines. People are about to be evicted. People haven't collected anything on their unemployment insurance yet. And these idiots are still sitting on hundreds of billions of dollars. Of course, we didn't have it to begin with, but come on. This is the whole argument that they make. We need to help the people. We need to help small businesses. Well, they're not doing it. And they still have the money from the Nobody Cares Act, which is why I call this the Nobody Cares Act. Do you see? They don't care about you. They don't care about you. How many times do I have to say it? Wake up. They don't deserve your vote. They don't deserve your respect. And so you have the central bank, the Federal Reserve in our instance, doing all of this smoke and mirror show for people who pay attention to that stuff. And then on the other side, people don't even know to ask about it. Well, we got to keep them distracted too with that circus over there with the election. Was it rigged? Is it fraud? What idiot's going to sit behind the Resolute desk? I mean, it doesn't matter. It doesn't matter. What don't you get? 48.5 trillion's coming. You're paying for it. Where's the drainage of the swamp? There is none. There was none. There ain't going to be any. Military-industrial complex got more money than they ever received. Federal Reserve is back to the zero bound. Emergency facilities, trillions of dollars in the balance sheet expansion. Come on, give me a break here. Nothing. Housing prices through the roof. Financial asset prices through the roof. Not because of any fundamental economic growth. No, on the contrary, because there isn't any. So central banks have to flood the system with liquidity. Federal government's got to spend money they don't have to keep things propped up. No, keep the addicts on Wall Street happy. That's all you got to do. Give them their fix. Give them their fix. Give them their fix. That's all you got to do. It's pathetic. And people don't care. People don't ask the question, well, why is my account going? Oh, well, clearly it's because you're a genius. That's what they'll say to themselves. Honey, I'm a genius. Anything I buy, it just keeps going up. I must really know what I'm doing here. No, you don't. You don't. And these people, those who don't know, are in for a rude awakening. That day will come. Can this continue for several months more? Sure can. Can it continue for another year? Yeah, it could. All I know is the further it goes, the worse it's going to be. Don't forget, there's historical precedent for 50% declines, top to bottom. 80% declines, top to bottom. 90% declines, top to bottom. Don't think it can't happen again? Don't be a fool. Don't be stupid. It most definitely can happen again. And the worse they take it to new heights, the worse the fall is going to be when economic gravity takes hold once again. Some market performance. We have the the Reserve Bank of Australia, let's say, it has held its cash rate at a record low of 10 basis points, as was anticipated. And of course, we've been talking about the Reserve Bank of Australia here for the past couple of months, too. Basically keeping these rates low, wanting to maintain these low interest rates, and advising the federal government to, keep the stimulus going, keep the pedal to the metal. Again, this is all in chorus here. They are all on the same page. We have the dollar index trading at a 30-month low, 91.76. The euro to the U.S. dollar is at $1.19.5, getting closer to that 120 level. So this sort of plays into gold and silver too, right? We see a lot of dollar weakness here. So why is gold and silver, why is it selling off? Well, we'll get to that. We have overnight futures trading. Dow Jones Industrial Average is flat. The S&P 500 is up 1%. The NASDAQ 100 is also up 1%. Cash trade in Japan is gaining 1.3%. A mixed bag across the pond in Europe, but mainly in the red. The UK market's down 1.8%. Germany down 1/3%. French markets down 1.4%, and same for the Spanish markets. Australian cash trade is currently in the green, up 1%. On the commodity front, we have a little bit of a pullback here. WTI is at $44.98 a barrel. Brent at $47.49. Natural gas, $2.94. Gold and silver. Gold, $1,787 an ounce. Silver at $22.87. We'll come back to those, of course. And to round it out, Uncle Sam's 10-year junk note yielding 0.84%. Why isn't this yield higher? Shouldn't it be much more higher? If everything is great, fantastic, shouldn't everybody be leaping for joy into risk assets? Nobody should want to be in the treasury market. Everybody should want to be in the commodities. Everybody should want to be in stocks. Well, we're not seeing it, so something's amiss here. But we know this. All of these markets are busted. They're all busted. And if they're not busted because of what these jokers and idiots have been doing, well, then they're manipulated. And that's not tinfoil conspiracy. This is in the news. This is mainstream. These are fines that major banks are paying, such as J.P. Morgan Chase, $920 million for rigging the precious metals market, and then turning around and making $1 billion in the precious metals market. Two-tier justice system, that's another problem. Add that to the list in this first world banana republic. Again, it's right in your face. Right in your face. Gold and silver again here. Gold, $1,787 an ounce. Silver, $22.88. Okay, so why is it selling off like it has been over the past few weeks here? Why has it been somewhat range-bound in selling off, I should say, over the past few weeks? Is this a consolidation phase? Is this just sort of a natural pullback from recent all-time highs, well, with respect to gold, and a recent several-year high with respect to silver? So is this just a cooling-off phase? Or is this something a little bit more fundamental? Now, again, to me, this is a buying opportunity. Any type of weakness, especially like this, is a buying opportunity. But there are those who make the argument that the reason we're seeing this sell-off in gold and silver prices is because deflation is ahead. Remember, we talked about the coming insolvency and bankruptcies, right? We talk about this all the time. Well, a lot of people want to view this as deflationary. And the reason they make this argument is because, okay, well, if there's going to be people going out of business, companies going out of business, okay, people are going to get laid off, fired, hours are going to get cut back, pay might get cut, etc., etc. So there's not a lot of juice flowing around in the system. So they say that's deflationary, and of course they mean lower prices. Well, gold and silver can perform well in a deflationary environment as well. But you have to understand something, that inflation and deflation, they are both monetary phenomena, meaning inflation is an increase, to the money supply, and conversely, deflation is a decrease in the money supply. Well, hello, ladies and gentlemen. Every Thursday, we do our typical data dump here, initial claims, M2 money stock, Federal Reserve's balance sheet. There's no decrease. There's no deflation. Now, people might argue, oh, well, you have to look at velocity. What about it? How does that explain financial asset prices going up then? Well, I said, well, there's no velocity. There can't be inflation. That's ridiculous. That's ridiculous. That's an insult to your eyes and to your senses. It's ridiculous. You think all the people around the world are taking to the streets because, they're protesting because cost of living is just so damn affordable? No, they're in the streets because the cost of living is unaffordable. They can't tolerate it. They couldn't tolerate a 5-10% increase on a price of fuel, on a bus ticket, on a metro ticket. Couldn't take it. That was the proverbial final straw that broke the camel's back. That was it. So it's an insult. How do you justify then financial asset price increases? Stocks in particular. Bond prices. Housing prices. Education costs. Medical costs. Food costs. Utilities. How do you justify all this to these people then? Oh, there's no inflation because there's no velocity. What an insult. What an insult. And it amazes me because a lot of people who, rightfully so, criticize the government for the way they report their figures, when it comes to inflation, for some reason, these people believe it. They'll question everything else. They'll question GDP. They will question unemployment, initial jobless claims, a whole bunch of other data points. But when it comes to inflation, for some reason, these people, oh, well, that's what the government says. That must be what it is. Well, I'm not buying it. I'm not buying it at all. These central banks are putting the pedal to the metal. They're printing this money. It's going to make its way into the system. It's already here. It's just a question of where does it go? And it's always going to go to different places at different rates at different times, to different degrees. That's common sense. But everybody in their right mind, again, believe your senses. What's going on out there? When you go shopping, what's happening? You're spending more, getting less? What about the size of the package? You getting as much? If it used to be 20 ounces, is it now 18? Is it now 16, but still cost you the same? Maybe even more. Other ways to get you. Pay attention. So that's, an argument out there as to why gold and silver prices are coming back. They're pulling back. Well, because it's going to be a deflationary environment, because precious metals are sniffing out the tsunami of likely insolvencies and bankruptcies. And it's likely to be a tsunami of insolvencies and bankruptcies, but that doesn't mean that gold and silver have to go down. Not in the least, as far as I'm concerned, that's one of the boxes that's going to be checked off. That's a lot of uncertainty. Why would you want to park your hard-earned money, if you will, in the U.S. dollar? I mean, yeah, sure, have some of it. But why wouldn't you want to have some precious metals, at least as some sort of hedge, at least as some sort of insurance policy, if not outright investment? Now, I look at it as an outright investment. This is beyond the hedge. This is beyond an insurance policy for me. Because if the United States of America is going to end up at $48.5 trillion by 2024 national debt, and that's assuming we maintain current rates, it's going to get worse than that. What do you think is going to happen to precious metals? I mean, the market is going to have its day with all of these markets. It doesn't matter what's rigged and what isn't. Those players, those manipulators, and there are many of them, and they are powerful, they are not bigger than the market. What's going to cause the market, if you will, to have its day with us? It's anybody's guess. Your guess is as good as mine. And it might not be anything, meaning there might not be any type of external shock to the system. It doesn't have to be a pandemic. It doesn't have to be, perhaps, if the vaccines don't work. That could be a shock. Oh, they're not working now, or they only lasted for a couple months, and that didn't do much of anything. It doesn't have to be that. It could just be the system hitting its limit. And I think that's most likely what's going to happen. Sure, it could be some sort of war or civil strife or anything. It could be anything. At the beginning of the year, we go through the list from Deutsche Bank that they put together, some of the top risks in the financial markets. We go through that. Went through that last year, did that this year. Could be a whole host of them. Could be a whole host of things that aren't even on that list. But there's just too many stresses out there. There's just too many breaking points across the spectrum, across the world. We are also in an economic war with China. And so many other countries are at war with each other, economically speaking. That's why it's very difficult to believe a lot of the numbers that come out from anybody. Because they're all trying to attract as much capital from around the world as they possibly can. And so they want to make their house, they want to make their country look as good as they possibly can. And if they have to lie about the numbers, so be it. They don't care. They lie to us all the time anyway. Well, the number's really 1%. Well, we're going to tell them it's 5.4%, because isn't that better? Well, yeah, it's better, but it's not true. Well, we don't give a damn. We're going to make it 5.4% because then people might think, oh, well, they got the secret sauce. Everything's getting back to normal. Let's park our money with them. Them being the Chinese in this instance. No, don't fall for it, folks. China they are their own worst enemy. Just like most countries. Just like here in the United States, we are our own worst enemy. That's why I don't like the blame game. Blaming China for this, blaming China for that. No, this is our fault. China didn't establish our income tax. China didn't establish our Federal Reserve System. You understand this? China isn't manipulating our military-industrial complex, getting all this money, the lobbying and all this crap. They don't pass our laws. We do. The idiots that we elect pass these laws. We've done this damage to ourselves, just like the Chinese are doing damage to themselves, just like the Greeks did damage to themselves, the Germans, the Brits, the Italians, the Spanish. Everybody does damage to themselves. But it's always easier to blame somebody else. Nobody wants to take responsibility. Nobody wants to take accountability. So blame somebody else. Blame another country. Blame a politician. Blame a virus. Which allows them to justify the unjustifiable. Which is what we have been dealing with here for quite a while. But especially throughout 2020 with the Nobody Cares Act here in the United States. And similar programs around the world. So gold and silver can be telling us a few things. This is just a natural pullback in the market. A little bit of consolidation. A little bit of a breakdown. Buying opportunity for the long term. Perhaps you always have to admit that you can be wrong. Of course, I can be wrong. Have been many a times. Perhaps the deflationary argument might prove correct. Maybe that will bring down gold and silver because gold and silver is sniffing out a big tsunami wave of insolvencies and bankruptcies. But that's not going to be good for the economy either, now is it? Not in the short term. That's what has to happen. As I've been stating here for a long time, that's the market solution. But there's going to be a lot of pain associated with it. What about all the evictions going on, right? Something else. And then I know I mentioned briefly those Federal Reserve emergency facilities. A handful of them, if I didn't mention this already, a handful of them have been extended through the end of the first quarter of next year, so the end of March 2021. Don't be surprised if they get extended further. And with the Biden administration, with Janet Yellen, that dingbat at the Treasury Department, who knows what they're going to open up. That's why $48.5 trillion come 2024. We might be hoping that that's the number, because it could be much worse. And I wouldn't be surprised, which is another reason why you have to take a serious look at gold and silver. Have something real, have something tangible, have something that has withstood the test of time for millennia. Sometimes it's good to go back to the old days. What's silver and gold telling us? Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Koritis. Godspeed.